Welcome back to the Deep Dive. It is great to have you here with us.
Great to be here.
Today we are shifting gears a little bit. Usually we take a stack of business books or maybe some trending tech articles and we talk about the future in a very optimistic, shiny Silicon Valley kind of way.
Right. We look at the bits.
Exactly. The world of bits. We talk about the cloud, we talk about AI, we talk about the digital revolution. We're usually looking up.
Yeah, we are. But the sources you've brought to the table today, they feel different. This doesn't feel like a tech review or a market analysis.
No, it feels like a classified file that someone, accidentally left on a park bench in DC.
It really does. And frankly, the tone of the research we're covering, this isn't just, here's a trend you should know about. It's a warning siren. It is. We are looking at a collection of documents that frame the current geopolitical situation, not as a competition, but as a red team intelligence briefing.
Okay, let's pause there for a second. Red team. I hear that term thrown around a lot. In cybersecurity, sometimes in corporate strategy. But what does it mean in this specific context?
So in a military or a high-level corporate strategy context, a red team exercise is where you hire experts to think like the enemy. You tell them, don't tell me what I'm doing right. I already know what I'm doing right. Tell me how you would destroy me. You ask them to find the holes in your defenses, the weaknesses you aren't seeing because you're too close to the project or, maybe just too optimistic about your own capabilities.
So for this deep dive, we are effectively looking at the Western economy, and I guess specifically the U.S. industrial base, through the eyes of a rival who wants to dismantle it.
Precisely. And the weakness this briefing exposes is, it's massive.
Right.
It basically argues that while the Western world has been obsessed with the digital revolution, the software, the apps, the AI, all the things that live on screens, we've completely neglected the physical foundation.
The atoms.
The physical foundation that makes that entire digital world even possible.
Yeah.
The atoms.
We're calling this deep dive the hardware trap. And looking at the core thesis here, it is so simple, but it is actually kind of terrifying in its simplicity.
It is.
The thesis is, we ran out of atoms.
It's a striking way to put it, isn't it? But it's accurate. You can talk about the cloud all you want, but the cloud is not a cloud. It's a building full of servers in Virginia.
Made of physical stuff.
Made of physical stuff. We have the code, but we somehow lost the atoms.
It's incredible. So let's set the scene for the listener. If you look at the stock market, if you just look at the headlines, for the last 2 years, really, ever since ChatGPT dropped and took over the world, what is everyone talking about?
It's all software. It's AI. It's the cloud. It's companies hitting $3 trillion valuations because they have the best large language models.
Right.
It's about scalability. It's about margins. It's about code that you can replicate infinitely for zero cost. It's the idea of the thing, not the thing itself.
Exactly. Our sources call this the software delusion, and it's a great term for it. We are all just looking at the screen, completely obsessed with the pixels and the code. We're buying NVIDIA stock, we're analyzing algorithms, we're trying to figure out if an AI can write a better poems. We are living in a world of bits.
Meanwhile, nobody's asking where the physical chips actually come from.
Yeah.
And I don't just mean who designed them. We know the architecture is done in California or Austin. I mean the actual physical substance of the chip.
The atoms.
The atoms, the silicon, the doping agents, the metal leads, the stuff you can hold in your hand.
And this is where the red team analyst, the persona we are adopting for this deep dive, gets really urgent. They are basically screaming from the rooftops. Look, you can print money. The Federal Reserve does it all the time. It's a keystroke. You can copy code. You can scale software infinitely with a click of a button, but you cannot print cobalt.
You cannot code gallium.
No, you just can't.
These are elements. They sit on the periodic table. They have to be dug out of the crust of the earth. They're finite, they're difficult to get, and they are located in very specific places. And the reality this briefing lays out is that while we were busy building apps and social networks, a rival power, specifically China, was busy cornering the market on the periodic table.
That is the mission for this deep dive. We are going to open the file on what these sources call the periodic table war. We need to investigate how the West walked, completely eyes open, into a trap where we have the best software in the world. But we might lack the physical ingredients to build the machines it runs on.
And it's not just about economics or stock prices. This goes way beyond that. It's about security. It's about the fact that the supply chain for the entire 21st century has a choke point. a choke point we didn't fully appreciate until it was almost too late.
So let's unpack this. The briefing is structured almost like a criminal investigation, and it starts with the crime scene. The first major point in the briefing is something called the refining choke. And I think this addresses the most common counter-argument I hear when people talk about resource scarcity.
Which is the abundance argument.
The abundance argument. Exactly. I can hear you thinking it right now. Wait a minute. The U.S. is a massive continent. We have plenty of resources. I mean, we have huge lithium deposits in Nevada.
We do?
We have rare earths in California. Canada and Australia, our allies, are huge mining countries. So we aren't actually running out of the rocks, are we?
No, and that is a very, very important distinction to make right up front. We aren't running out of the rocks. Geologically, the West has plenty of raw materials. If you look at a geological survey map, North America is rich in almost everything we need. We have the dirt.
Okay.
But this is where the forensic view of mining is so important. The briefing makes a crucial distinction that most people, frankly, just miss.
Yeah.
The difference between extraction and refining.
Okay, so digging versus cooking. Is that a fair way to put it?
Essentially, yes. That's a great way to put it. Extraction is just digging the rock out of the ground. That's the easy part. I mean, it's heavy industrial work. You need big trucks, big shovels. But relatively speaking, anyone can dig a hole if they know where the rock is.
Right.
The hard part, the expensive, technically difficult, and incredibly energy-intensive part, is the refining.
Walk us through that. Why is refining the bottleneck? Why can't we just dig it up and put it in a battery?
Because the rock you dig up is it's useless. It's mostly waste. If you dig up lithium ore, something like spodumene, it's just a rock with a tiny, tiny percentage of actual lithium in it. Maybe 1 or 2% if you're lucky.
Okay.
To make that useful for a Tesla battery, you have to process it into battery-grade material. And this isn't just crushing rock. This is complex chemical engineering. It involves massive amounts of energy, specialized chemical baths, intense heat, pressure. You are basically turning a rock into a product that is 99.999% pure.
So it's much closer to a pharmaceutical lab process than it is to a quarry process at that final stage.
Yeah. Exactly. It's a high-tech chemical plant. And the source material uses an analogy that I found really helpful to visualize this. It compares it to the oil industry.
It's the perfect analogy, and you really have to sit with this for a second. Imagine if the United States had massive reserves of crude oil in Texas. We pump it out of the ground, barrels and barrels of it. We have the extraction part totally nailed down. But imagine if the only refinery in the world capable of turning that crude oil into gasoline was in Beijing.
Just think about the implications of that for a moment. You have the crude, you have the barrels sitting there on the dock in Houston, but you can't put it in your car. It won't run.
Exactly. To make it usable, you would have to put your Texas oil on a tanker, ship it all the way to China, pay them to refine it, and then buy the gasoline back from them and ship it all the way back.
So in that scenario, who actually controls the energy market? It's not the person with the oil well.
No, it's the person with the refinery. They set the price, they control the supply, they have you over a barrel, literally.
And the briefing argues very convincingly that this is exactly what has happened with critical minerals. We have allowed this massive geographic separation between where the stuff comes from and where it gets turned into something useful.
It is. The statistics in this briefing they're alarming, and we aren't talking about a slight lead here. This isn't like China has 51% of the market and we have 49%.
No, it's not even close.
Get this. China processes about 65% of the world's lithium. They process 74%, 3/4 of the world's cobalt.
And for rare earth elements, which is maybe the most important category.
This is the big one. For rare earth elements, and you have to remember, these are used in everything from electric vehicle motors to wind turbines to missile guidance systems. They control about 90% of the processing capacity.
90%. That is a monopoly. That is Standard Oil, Rockefeller levels of industrial control.
It is a functional monopoly. So even if a mine opens in the U.S., and some are opening, like the Lithium Pass in Nevada, the supply chain right now usually looks like this. The rock is dug up in America, it's put on a ship, it's sent to a Chinese refinery for processing.
Because there is nowhere in America to do it.
Exactly. There's no domestic option at scale. And then the finished purified material is shipped all the way back to a U.S. factory to be put into a battery.
That seems, I mean, just on its face, it's incredibly inefficient. And strategically, it sounds insane.
Yeah.
It adds cost. It adds a massive carbon footprint from all that shipping.
And a massive geopolitical risk.
A huge one.
Oh,
So
yeah.
How did we let this happen? Why did the West just hand over the keys to the entire industrial base?
Well, the dirty secret, as the briefing calls it, is that we did it voluntarily. This wasn't a theft in the night. We signed the papers, we packed up the factory equipment, and shipped it over ourselves.
We wanted to. Why?
We wanted the clean jobs. You have to understand, refining rare earths is a nasty, nasty business. It involves things like acid leaching. It produces radioactive byproducts. Thorium is often found with rare earths, and it creates massive amounts of toxic wastewater.
Okay.
For the last 30 years, the West, Europe, and the U.S., we tightened our environmental regulations. We said, not in my backyard.
NIMBYism.
The ultimate in NIMBYism.
Yeah.
We wanted the design jobs in Silicon Valley. We wanted the branding, the marketing, the software development. We wanted the beautiful Apple headquarters, not the Foxconn factory, and definitely not the chemical plant that processes the neodymium for the iPhone speakers.
We wanted the high margins and the clean air.
We outsourced the pollution.
That's what it was.
We outsourced the pollution and the heavy industry because it was cheaper and cleaner for us. It kept our rivers clean and our air breathable. But the consequence, which we are only now finally realizing, is that we outsourced the capability, we lost the know-how, we lost the engineers who know how to build and run these refineries. And now, as a result, we cannot build an EV battery, we cannot build a fighter jet, and we cannot build an iPhone without that material passing through a Chinese refinery first.
That is the refining choke. It's not about the mine, it's about the processing. But the briefing, it goes deeper. It says that while we were giving away the refining capability, China was also executing this very long-term strategy to secure the raw materials at the source.
Yes. This is the second part of the trap, the Silk Road of materials.
And the briefing contrasts Western short-termism with Chinese long-term strategy. And this feels like a fundamental clash of capitalisms, doesn't it?
It is. It's a cultural and a structural difference in how our economies work. In the West, specifically in the US and the UK, public companies live quarter to quarter. It's just a fact. If you are a CEO of a mining giant or a tech firm, you need to show earnings growth every 3 months.
Right, the quarterly report.
If you miss your numbers, your stock tanks, the analysts downgrade you, and you probably get fired.
So you aren't incentivized to make a 20-year bet. There's no reward for it.
Exactly. You are absolutely not incentivized to make a 20-year bet on a mine in Africa that might not pay off for a decade. In the eyes of an analyst, that's dead money on the balance sheet. Wall Street hates it. Investors want their returns now.
But the Chinese state-owned enterprises, the SOEs, they operate on a completely different timeline.
Completely differently. They operate on what they call the go-out policy, which was launched, I think, around the turn of the millennium. The mandate from Beijing was simple. Go out into the world and secure the resources needed for China's long-term industrialization.
So they weren't looking for next quarter's profit.
They were looking for 50-year security contracts. They were playing a multi-generational game of risk while we were, day trading.
And the case study for this, the one that really illustrates the difference in thinking, is Cobalt.
Cobalt is the perfect example. It's absolutely critical. If you want to stabilize a modern lithium-ion battery, the kind that's in your Tesla or your phone, you need cobalt. It prevents the battery from overheating and catching fire. It's essential for energy density and lifespan.
And where is it? Where do you find it?
Geologically, it's a complete freak of nature. It's not evenly distributed around the planet at all. The vast majority of the world's cobalt is located in one country, the Democratic Republic of Congo, the DRC.
So if you want to control the future of batteries, and by extension electric vehicles, you have to control the mining in the DRC.
Correct. And this is where the divergence in strategy becomes so clear. Western mining giants were always very hesitant to invest heavily in the DLC, and you can see why, right?
Oh, yeah. Political instability, constant risk of war, corruption, terrible infrastructure.
It's a very risky place to do business. A Wall Street compliance department would look at that and just say, stay away.
But the Chinese firms went all in.
They went all in. The briefing states that China now owns or holds significant stakes in 15 of the 19 industrial cobalt mines in the DRC.
15.
Yeah.
Out of 19.
Yeah.
That's not just influence. That is effective control of the entire global supply.
It is. And they didn't just buy the mines with cash. This is the really clever part of the strategy. They used a playbook called Resources for Infrastructure.
Okay, what's that?
They went to the DRC government, which was desperate for development, and they said, look, we will build you new roads, we will build hospitals, we will build parliament buildings, we will build soccer stadiums.
Things the country desperately needed.
Exactly. Tangible, visible signs of progress. And in exchange,
In exchange, we get the mineral rights.
for decades, it's a trade. Infrastructure for atoms.
It's brilliant in a way, because it's not just a financial transaction. They're building political goodwill and physical dependency at the same time.
Precisely. And now, if you look at a map of Africa, and the briefing describes this so vividly, it looks like there are routes spreading from China directly into the Congo. It's a dedicated, closed-loop supply line. Trucks drive on Chinese-built roads to Chinese-owned mines. They take the ore to Chinese-built ports, and they ship it on Chinese vessels to Chinese refineries.
But the West is trying to catch up now, right? I mean, I've read about the Libido Corridor.
Yes, the US and Europe are finally waking up. They are backing a huge project called the Libido Corridor. It's a rail line that's intended to get minerals out of the DRC and Angola to the Atlantic coast, bypassing the Chinese routes and shipping them directly to the West.
So is it working? Is it a viable alternative?
It's a start. It's certainly better than doing nothing, but the red team analysis on this is, well, it's brutal. They basically say, we are showing up to the poker game 15 years late, after most of the chips are already off the table. We are trying to build a rail line. China has already built the mines, the processing plants, the roads, and maybe most importantly, the political relationships.
It's the concept of vendor lock-in, but on a planetary scale.
That's a great way to put it. It's very hard to switch suppliers when the supplier owns the entire ecosystem. You can build a brand new train, but if the mine at the end of the tracks is owned by a Chinese state-owned enterprise, they don't have to put their rocks on your train.
That's a very sobering thought. We are trying to break into a walled garden that we, in many ways, help them build.
Okay, so we've got the refining choke where they process everything. We've got the Cobalt Monopoly where they own the raw dirt. But the part of this briefing that really, truly unsettled me, the part that made me sit up straight, was the section on the kill switch.
This is where we move from economic competition to potential conflict. This is where it stops being about market share and starts being about national survival.
The briefing zeroes in on two elements, gallium and germanium. Now, I'll be honest, before reading this, I thought gallium was just that fun metal you played with in chemistry class because it melts in your hand.
It does melt in your hand. It has a very low melting point, just above room temperature. But that's not why it's strategically valuable. It is the critical ingredient for things called gallium arsenide and gallium nitride.
Which are used for?
High-performance semiconductors. And we are not talking about the chip in your toaster here. We are talking about the kinds of specialized chips used in ESA radars, on fighter jets, in missile defense systems, in satellites, and in 5G telecommunications infrastructure.
And germanium.
Germanium is crucial for fiber optics and for high-end thermal imaging, so night vision goggles.
So these are not optional. These are military-grade necessities. You cannot run a modern army without this stuff.
Absolutely not. You cannot build a modern radar system for an F-35 fighter jet without gallium. It is physically impossible with current technology. Gallium allows the radar to handle higher power and work at higher frequencies with incredible precision. It's what gives our jets their technological edge.
And let me guess the statistic here. Where does the world's gallium come from?
China produces roughly 98% of the world's raw gallium.
98%. That's not a monopoly. That's total ownership. That's I own the ball, the court, and the air you breathe while you play.
It is. And for a long time, the skeptics and the free traders always said, well, China would never actually weaponize this supply chain. They want to sell to us. We are their best customers. Cutting off exports would hurt their own economy too much.
That's the standard globalization argument, right? Trade prevents war because it's profitable for everyone. The McDonald's peace theory, the idea that countries with McDonald's don't fight each other.
Right. But the red team points out that in August of 2023, that entire argument basically died.
What happened in August 2023?
China announced strict export controls on gallium and germanium. Now, they didn't completely ban it outright, but they required a special state-issued license for every single shipment.
So they put a gatekeeper on the tap.
They gave the state the power to turn off the tap whenever they want, for any reason they want, to any country they choose.
The briefing calls this a warning shot.
It was a proof of concept. It was a signal to the West, and specifically to Washington. You have to remember the context here. The U.S. has been restricting China's access to our high-end AI chips, like the NVIDIA H100s. We've been trying to stop them from getting the best computing power.
Right, the chip war, that's been all over the news.
Exactly. So China turned around and said, effectively, okay, you want to cut off our access to the brain. We will cut off your access to the nervous system. We can starve your defense contractors of the basic metals they need to build their most advanced systems.
That is the kill switch, the ability to just turn it off.
Imagine this scenario. If a trade war turns kinetic, If there's an actual military conflict in the Pacific, over Taiwan, for example, they don't need to bomb the Raytheon factory in Arizona. They need to launch a risky cyber attack on Lockheed Martin.
They just stop the shipments.
They just stop the shipments,
Yeah.
and the factory powers down.
But radar screens go static.
The production lines for missile seekers grind to a halt. You can't build the night vision goggles for your soldiers. And the terrifying reality the briefing highlights is that the West has no strategic stockpile of these processed materials. We operate on just-in-time inventory.
Just in time. The efficiency mantra of the last 40 years, don't pay for warehousing, don't tie up capital, just have the parts arrive right when you need them for the assembly line.
Which works great for selling sneakers or building cars in peacetime. It works terribly for fighting a war when your primary supplier is also your primary adversary. We don't have a 5-year supply of gallium sitting in a strategic reserve in Arizona. We have a few weeks' supply, maybe a few months if we scramble and ration.
It's so incredibly fragile. We talk so much about supply chain security, but when you look at these numbers, 98% of gallium, 90% of rare earth refining, it feels like we are completely and utterly exposed. We've built a skyscraper on a foundation of sand, and someone else owns the sand.
We have. And that's why the analyst, the persona in this briefing, is so urgent and alarmed. The foundation of our high-tech military and our high-tech economy is resting on a supply chain controlled by our primary rival. It's a house of cards, and they just showed us they know exactly which card to pull to make it all fall down.
So let's pivot. Because we've established the trap, the software delusion, the refining choke, the kill switch, it's a very heavy picture. But this briefing isn't just doom and gloom, it's also an investment thesis. It suggests that if you understand this trap, you can understand where the value in the world is going to shift.
That's right. It argues that we are right now entering a commodity supercycle.
Okay, what does that mean for the listener who might be thinking about their portfolio or just where the world is headed? Supercycle sounds big.
It means the pendulum is swinging back. For the last 15, maybe 20 years, the smart money was in bits. It was in software companies, apps, social media platforms. That's where all the growth was. You could start a company with a laptop in a garage and be worth $1 billion in 3 years. But the thesis here is that the next 10 years will belong to the atoms, to the physical stuff.
The value is shifting from the code back to the dirt.
Think about it. It's basic supply and demand. If there's a sudden, massive scarcity of the physical ingredients needed for AI, for EVs, for robotics, for defense, then the price of those ingredients has to go up. It has to. The briefing uses the phrase, "He who holds the metal makes the rules."
So where does the red team suggest looking? I mean, they aren't saying go buy Chinese mining stocks, presumably. That sounds like buying a ticket on the Titanic after it's already hit the iceberg.
No, definitely not. The risk there is way too high. You've got political risk, regulatory risk. You can't trust the accounting. No, the thesis suggests looking for friendly dirt.
Friendly dirt. I like that. Untack that.
Friendly dirt means miners and supply chains that are located in jurisdictions that are geopolitically aligned with the West. Think Canada, Australia, maybe parts of South America like Chile.
Places where the rule of law holds and where they aren't going to embargo us if a conflict starts.
Exactly. The strategic value of a lithium mine in Quebec is suddenly significantly higher than a lithium mine in a hostile or unstable region, simply because you know you can actually get the metal when you need it. The market is going to start pricing in a security premium for these assets.
The briefing mentions a company like Glencore as an example.
Right. And it's not a stock tip, but it's an example of a type of company. Glencore is a massive commodities trader and miner. They deal in copper, cobalt, zinc, the real, boring, physical stuff. The briefing compares a company like that to the arguably inflated value of a pure tech stock like NVIDIA.
So it's a valuation argument.
It's a huge valuation argument. NVIDIA is priced as if the supply of chips can grow infinitely forever. It's priced for perfection. But Glencore, or other major miners, are priced like boring, old-world dirt companies. They're relatively cheap. The red team argues that this valuation gap is going to close. The hardware scarcity is going to force a fundamental revaluation of the physical world. As chips get harder to make because materials are scarce, the materials themselves become the new gold.
It also points to refining technology as a key sector. And this feels like the tech bro solution to the dirt problem, right?
This is a huge sector to watch.
Yeah.
Remember, the choke point isn't just the rock. It's the dirty, expensive processing, the acid, the waste, the pollution. So any company that is developing new technologies to refine lithium or rare earths cleaner, cheaper, and this is the most important part, inside the United States or Europe, Those companies are sitting on the holy grail.
So if you can figure out how to refine lithium in Nevada without destroying the local water table, you effectively break the entire monopoly.
You break the monopoly. Exactly. That is the technology that unlocks the trap. You hear about startups working on things like biological leaching, using custom bacteria to eat the rock instead of acid. You hear about new closed-loop systems that recycle the chemicals. If any of those technologies work at scale, they completely change the geopolitical map. It's high risk, but the reward is astronomical.
This has been a heavy file to open. We've gone from the illusion of the digital cloud to the gritty physical reality of Congolese mines and Chinese refineries. It really changes how you look at your phone. It's not just a piece of glass and magic, it's a piece of global geology and politics.
It's a necessary wake-up call, I think. We can't ignore the atoms anymore. We spent 20 years living in the cloud, but our feet are still planted on Earth.
So as we wrap up, I want to pose the final question that the briefing leaves us with. It's an ethical dilemma, really, and it's one that every single listener needs to grapple with, because we are all part of the problem here.
It comes down to this. We know we are vulnerable. We know we are reliant on a monopoly that could be, and has been, weaponized. But breaking that monopoly requires us to start doing things that we stopped doing for very good reasons.
Mining is dirty, refining is polluting.
Yeah,
There is no such thing as a clean mine, really. There is only cleaner.
that's it. So the question is, would you, as a listener, support opening more mines in your own country? Would you support a rare earth refinery being built in your state, maybe 10 or 20 miles from your house, knowing the environmental risks if it meant breaking our strategic dependence on China?
Or are we stuck? Is the NIMBYism, the not in my backyard mentality, so strong in the West that we would rather be strategically vulnerable than accept any local environmental impact? Are we pursuing a green energy transition so badly that we are willing to let a rival power control the engine of that very transition?
And practically, can we even do it in time? This isn't software. Reindustrialization takes decades. You can't just spin up a mining industry like you spin up a server on AWS. You have to get permits, you have to build it, you have to train the workforce. It can take 10 years, maybe more, just to open a single mine in the US.
That's the scary thought, isn't it? We might finally have the will to change, but do we actually have the time? The red team analysis suggests that the window is closing, and it's closing fast.
It does. There's a real possibility that the dependence becomes permanent if we don't move immediately. We're in a race against time, and we're starting the race with a backpack full of rocks.
A sobering thought to end on. We ran out of atoms, and getting them back is going to be the great struggle of the next decade.
Don't ignore the atoms.
Thanks for diving in with us. We'll see you on the next one.
Take care.